Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we'll take a look at the German DAX and the FTSE like we always do starting out the show. They've had some pretty good support down in this area, which is really good. The end of the world has been put off by another few days, thankfully, because of the wonderful political news that we heard overnight, supposedly caused the rally in the stock market of 600 points. We're moving 600 points a minute sometimes, so we got to be very careful in here. I'm going to give you my 2 cents worth, boys and girls. Billy Ray is stepping out. Here's what's going to happen, in my opinion. And remember, I am wrong a lot. So let's take a look here at this E-mini S&P. Here's what we're going to be looking at here. It's a different brand of coffee this morning, folks. It has extra caffeine. You'll notice that we had the 3 drive to a top pattern up there at that 33.95 level. We then broke. You see the big gap down 2 weeks ago. That was when the virus really started to get bad. Remember, this virus was known back in December, but nobody told anybody about it. The market came down, and you notice here last Friday we stopped exactly at the 78% level of the low that we made back in May of last year. We also stopped exactly at the 50%, exactly to the 50% level where we were here last Friday. Now, folks, that is for all the indices to do that, and I focused that in my newsletter, and I did it on the FANG stocks. Everything hit it. Somebody with buku bucks, probably the O'Briens, came in and supported the market at that time on Friday, and that's when we had this big rally. As you can see, the rally rallied up to the 50% level. And let's just see where we are last night. So here's what happened. The Federal Reserve comes in, and they are going to save the world. Let's get this chart up so I can get it correctly here. Oh, dear. What did I do wrong now? Oh, shucks. I blew it. I thought I had it ready. I don't. Let me see if I did. Here's where we at. Okay, here's where we at. Yeah, just start. I want to go through a little process here. Here's where it is. Okay, now this is the daily chart, and what we're seeing now, the market rallied up due to the Federal Reserve. We got up to that 3160 or something like that in the S&P. And then what's happened since that time is look what happened yesterday. All right, let's get this down here. We'll get up so we can see these one at a time. All we did yesterday with that 160-point swing down was come down to the 61% retracement within 5 points of the low we made back on February, the end of February, the 28th, okay? And then what we've had happen so far is last night we were trading right around the 382 at 30.34, but you look at the blue line above it. You see that blue line? That blue line is the Fibonacci number of the whole thing. That came in at 30.74. Now, if you look at that really closely, let's just see what the market really did. Okay, I'm going to get up here. Let you take a look at it. I'm giving you my 2 cents worth. Okay, look at the first black line there where it says Fed rally. You see that move there where we went from 30, we rallied 100 S&P points? Look what we did here last night, 100 S&P points, repeating that same swing again. Exactly, the fib number was 30.74, and it hit 30.74. And I sent out, before this was happening, I sent this out to the 24/7 people and say risk 5 points, and it had 20 handles in it. So who knows what's going to happen. But anyway, that's what I'm looking at. I don't know if that means anything or not. But that ABCD pattern, that big ABCD pattern, I think this is where we're going. We'll get it up here to let you take a look at it. This is the long-term chart. This is doing, folks, trust me now, I really don't know diddly squat about the fundamentals. I know less about the medical stuff. I rely on other people to give me information, and who knows. But you can see here we made the retracement. We rallied up. Exactly where it should have. So far, as long as we don't get above the high overnight was 31, 37 the other day, then we came all the way back down to that 28, 29, 28.80, I believe, and then rallied another 100 pips, 100 points up to 30.74, which is the 61% return. We get above 30.74, folks, the market could go a lot higher, I suppose. Not a lot higher, but a little bit higher. This is a major thing that has happened here. Just to give you an idea, the move from A to B was 6 standard deviations. Do you know that has never happened in the stock market since they started trading at that buttonwood tree there at this corner of Broad and Wall? I mean, that's how big it is. I don't. If this were me and I was back in 1929 or something, I would be scared to bejeebies. And the reason why is, let me just give you a little 10-4 here. I'm not going to scare anybody here because we're all going to worry about this. That's right. Okay, let's move up here. You see at the very top where the little dotted line is, that was the high on September 3rd, 1929. You see that big arrow there? That big arrow there is the big turning point in the market. That's when the market actually turned down. That was in around the 17th of September, and then it went down quite a bit. So we just got to be careful. I'm just looking at numbers. That's really all. No matter what happens, we're going to be coming out of this okay. There's no question about it. How the rest of the world does, I'm not sure. But you know what? Nobody else is either. And this stuff with the politics, what they should do is these media companies, they should send Trump bonuses, because without him there'd be no news. Okay, the ABCD Gator saying good on the weekly. Yes, you could do that weekly, but the reason why I didn't do that, Gator, is because first of all, the weeklies two levels past my pay grade, because I'm risk averse. And the second reason is the ABCD one is so doggone clear. I mean, that's that's just as clear as can be. It's doing everything that it should be doing, so that's pretty much what I'm looking at. I can't tell you any more than that. If I could, I'd lie. I don't do that. All right, let's take a look. Last night, which was interesting to me, and I follow the bonds quite a bit, because I believe that the biggest trap here are these people that are buying the bonds for a flight to safety. That's like sending an arsonist to a barbecue pit. Or barbecue party. Here was the forecast that I had for the bonds last night at around 4:30 in the morning New York time. It looked like the bonds were ready to turn over. That's when the S&P started to rally above 30.33. That's when it started its move from 30.33 to 30.40, and the bonds dropped 2 full handles from there. Folks, the open interest in the bonds has been dropping. This is not bullish. Where are these buyers going to come from? The buyers that are in there now are covering shorts. People that didn't believe the O'Briens that we could go to, negative interest rates. But, we're not negative yet, but we're getting close. It might happen. I heard a guy on Bloomberg today say there's nothing that the Federal Reserve won't do to hold this market up. Well, they tried that in 08 and it didn't work, so we'll see. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I wanted to bring to your attention something that I've been working on with my good friend John Jameson. This is the things that I work on in the market. Basically, I'll tell you how this all got started. Back in 1970, I went to San Francisco to listen to the Hearst cycle thing, and that's where I met John Hill. And from that time, John took me on under his wing as a mentor, still under that same wing. And John will be, I believe, 96 next month. In May, I believe, is his birthday, and he's still trading actively. But the key, what happened was, John was the first one to really talk to me about patterns. He gave me the information to go see the Investment Center bookstore there in Santa Monica, and I met Don Mack, and fortunately we became very close friends, and he gave me the Gartley book, and that's how I started looking at that stuff. But then when I left Drexel in 1982, the reason that I left Drexel is I knew that we could see that these computers were going to be coming on your desk, the personal computers, not laptop, but personal computers, so you'd be able to see the prices go up and down. I had been using a ticker tape when I was at Drexel, and also when I was living in Westlake Village, and so it would be a lot easier than filling that basket up with paper, because all I got was the Chicago Mercantile Exchange and the Board of Trade. We only had about 30 or 40 commodities to trade, so it was not a big deal. Now there's 250,000 things that you can trade. But when I went to Chicago, the main reason was to find out if the floor traders actually, kept your orders separate, that they really hit it. And they do. These guys are called $1 million brokers. They don't show what the decks are and everything. And so you could see right at the very beginning. I've told these stories before. I'm not going to tell them again, but it was very, very fair. Now, when the SOS bandits came out in the late 90s, that got the stock exchange people from trading quarter half to decimals. Man, that cost billions of dollars to some of those people, but that's what the market wanted, and that's what we got. And now it's easy. You have a membership on the exchange because you've got electronic trading. You can see everything. And some of the bad things is they show you exactly what your equity is, to the second. And most people watch that, which is probably the wrong thing to do. But the reason, once I figured out that was it, basically you don't need 10 or 15 different monitors to do this, folks. If you do some simple things that really work, these things that I look at are the opening price, harmonic numbers, standard deviation, market stats. Those are the, the patterns and fib numbers that I use. And I put that into a little floor trader's manual. It'll be out here in the next week or two, and it comes with a really nice video. It's all about risk control, risk management, and that type of thing. But it's all about probability, folks. And the main thing is you got to remember, it's not about the amount of money that you make. It's about the amount of money that you don't lose. You got to play good defense, and that's the real key to what you're watching here. And that's what these numbers do for you. They help you play good defense, because if the markets, go beyond areas where you want to be, like last night, once the S&P got above 3035, and there's a perfect ABCD there, and it starts moving, to the upside, you know that there's something higher in the picture there, so you can't stand in front of it. And that's pretty much what happened. And it doesn't always happen that way, but you're trying to put the odds in your favor, and that's what it's all about. It's about probability. It's not about 100%. There's no 100% trade. There is 100% trade. And I've said this many times. It's the Larry Williams calculator trade. When you get your calculator out to see how much money you're making, you better start clicking that mouse button, because your greed mechanism just hit tilt, and that one's 100%. I'll tell you, I have never seen one that works any better than that. So when you start calculating how much money you made, bada bing, bada boom, you're in big trouble. So sugar, Ruby, we are heading down in sugar, darling. Just give me a second here, and we'll get the sugar up for Ruby, and we'll be in good shape here in 1 second, and we'll get the old sugar up. I was just thinking of you this morning, because I saw it trade below 13 this morning, or right around 13. So we backed off $3,000 from the ABCD level. We got up to 16. Now we're at 13, and that we should come into some pretty good support here. Around this level of a 1350, Ruby. I think I saw 1370 this morning, so 1350 should be some pretty good support. Oh, there, you already typed that in there. Wow. Yeah, that's good. Yeah, that's exactly what I think it is. I think 1350 is good. It trades $11.20 a point, so I think you could trade that for probably 30 pips or $330. It looks like it would be. Yeah, I think it's okay. It's looks pretty good. Hey, it's better than buying it here than it was at 16, I hope. But beautiful ABCD in that one, so watch it. We're having a pretty good rally here in the soybean meal. And the soybeans, the wheat hasn't taken off yet, but I think wheat's got a fair chance. I was speaking with Cy Monley this morning about the farmers, and he said most of these guys are in relatively good shape, because a lot of the tariff money that we got from these things with China have kept them afloat, so they're doing pretty good. The problem is they're not shipping a lot of stuff. For one reason, they can't get drivers or boat captains to move the stuff, especially in the Asian countries. So that's what the whole thing could be, for sure. Now, one of the things that we really need to watch, folks, and that is when you talk about trade and stuff, you've got to remember the transportation index. Now, let's just take a quick look here at the transportation index. We'll have Bill Chapman as our guest here in about 10 minutes, so hang in there, boys and girls. Don't fall asleep yet. Here's the Dow Jones Transportation. So you notice we didn't make a newer high. It was only at 90% level. You can see that at the very top there at 90%. There's the big gap down. You can see there on early March when we gapped down. And what we did yesterday was rally to a 38% retracement of that gap. And then we were completely reversed. And if we start going below that level, below that 78% level, there's something wrong. Somebody made a monster bet. I said this last Friday. Just look at the newsletter. Look at all of them: the Nasdaq, the S&P, the Russell, the Dow Jones Industrial Average, cash S&P. They all hit perfect fib numbers. All the FANG stocks hit perfect fib numbers. So until we take out those lows of Friday, taking out those lows of Friday mean we'll be able to, we might be able to rally to 3,200. Hey, dude, we could rally to, we could make new highs. There's no question about it, man. These guys can run these puppies wherever they want to run them, you know. But today's going to be a key day. We got to get above that 3074 level. Otherwise, there's going to be some interesting things to happen here. Well, stay tuned, boys and girls. I'm going to give you a Christmas. I'm going to give you an early Christmas present here today. Watch this trade right here. This is one. It's on my big watch list, and you'll take a look at this one because this is the U.S. dollar reverse. This is the euro. Watch the euro, folks, at 110.60. If it can hold that and take 2 days to get there, ooh, it's going to look like looks like Santa's coming down the chimney is what it looked like to me, because you wouldn't have to be risky very much there, only about 30 pips. So we'll see. Stay tuned for Bill Chapman of Trend Reaction, 877-967.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Bill Chapman of Trend Reaction on the line. Bill, how are you today?
Very good, Larry. How are you today? Pleasure to be speaking with you.
We're hanging it. Good speaking to you. Are you keeping your sanity with this kind of volatility?
Actually, I am.
I'm sure you are.
I want to start off first by thanking you for saving me a lot of time. I had been considering writing a book, But after I finished your book, Trade What You See, I realized it's already been written. So thank you. But that's a great compendium of technical analysis, elements of trading, risk management. I mean, you covered it all in that one book.
Well, got lucky. Emily, I would urge you to write a book, though, just to keep everything, because I can't cover everything, and you've got some great stuff yourself. So tell us how you're handling these types of markets, Bill. I think that's the main question that our folks would like to hear.
Well, as you know, I do my analysis unlike anybody else out there. We're all aware that on average, 80% of the volume on any given day is driven by program traders. And that leaves a huge footprint on the tape. So I'm analyzing the programs. I'm not necessarily analyzing prices. So we had a great day yesterday. I post here my AM call from yesterday, and it was spot on. This goes out to my clients normally an hour before the market opened. Probably the only place where you can get a market forecast, plus health tips. Mm-hmm. So we had, but the one thing I saw yesterday was the late pay attention time. We had a 9:10 pay attention time here, and that's late for the market. And that's usually indicative of an event, of a news event. And I brought it to my clients' attention when they got the letter in the mailbox on my for today point. Aussies cut rates 0.5%. Pressure on the Fed to do likewise. Keep an eye on the headlines. And sure enough, 9:05, just 5 minutes off the 9:10 pay attention time, the Fed cut interest rates 50 basis points to a range of 1 to 1.25%. Now, granted, this has been talked about over the past week, and it should have come as no surprise. I mean, the only thing I found surprising is that when Jerome Powell walked out for his news conference, the fact that he wasn't wearing a gingham dress. So but you can see, I'm going to bring up another chart here. This is my end-of-day chart. And you can see right there where the Fed rate cut was. And I put a profile chart up to show the direction that the market's going to move in. It's basically a roadmap for how the market should behave during the day. But the chart there at the 9:10 time frame, where they propelled the market up 100 points, Larry?
Yes.
Yeah, that closed the window that opened on February 27th. And then only to give it all back over the subsequent 15 minutes. That rate cut that they gave was the perfect excuse for the headline algos to put a run on the overhead sell stops on anyone who was short. They cleaned house. And then the sell-off through the remainder of the day was already in the cards. Because the programmers, they're currently setting up tomorrow's programs today, and they leave a huge, huge footprint on the tape. Now, the big question, of course, now is, are we at a bottom? Are we near a bottom? Everybody's so breathlessly, a 10% decline in the market over what? The fastest 10% decline from a high. I mean, did everybody forget October 9th, 1987? Or 1987 when the market collapsed 22% in a day?
Yeah.
I mean, that would take the industrials down to nearly 20,000 today. Or
$4,500 move, 4,500 points. Yeah.
It could knock 600 points off the S&P. So
wow.
I've been fiddling around with a cycle chart that I use, and I don't have this down quite. But this is my full moons and 93 days cycle on the full moons. And it varies. It's 92 days to 96 days. But if history is to be our guide, the last year, the bottom came in June, the 84th day into the cycle. Now the bottom came in this past week at 84 days into the cycle. Are we there yet? I don't know. But as you were saying previously about your Elliott waves, this is a great chart by Charles Hugh Smith of offminds.com. but it's a stock market crash scenario. And you can see it's exactly what has been going on when in February, the bears are betting on a double top. They get wiped out. Complacency was reigning supreme. Faith in the central banks, the new religion. So we've had our first stop, our first drop. And the rally cry right now, buy the dip.
Mm-hmm. Yeah, that's right.
And the Fed, in essence, has painted themselves into a corner. Relative to inflation right now, sure, we're at 1 to 1.25% on the Fed funds rate, but relative to inflation, which is at 2.5%, you're talking that we actually have net negative returns in our bond market. We don't have returns that are keeping ahead of the pace of inflation. And every time the Fed goes and delivers a rate cut, supplying, the Greenspan put, as it used to be known in the 90s, and then it was the Bernanke put in the and the QE, and now it's going to be the Powell put. As the guy was saying on Bloomberg this morning, the Fed will do anything to support this market, and they will.
Yeah.
But the more money they throw into the market, it's like putting additional ballast into a boat. Sure, the boat sails much smoother, but you're lowering the gunnels on the side of the boat so that it could easily get swamped and sink. And as far as I'm concerned, what the Fed is setting up to an exact same scenario as what happened in the 70s, where we got off the gold standard, we moved into the fiat currency, and we started printing money in order to pay for the Great Society that was built during the 60s and also pay for the Vietnam War without raising taxes. And they threw all that liquidity out there, and what fired up? Inflation. And in 1978, I can remember, and this is how you've shown my age here, I remember buying a loaf of bread at 39 cents at the beginning of the year, 2-pound loaf of bread. And by the end of the year, it was $1.89.
Yeah, I remember too.
Yeah. And what's the only thing they can do? Well, it's much like what Volcker did when he became chairman of the Fed. Or to step in and start to withdraw the money out of marketplace.
Yeah. Hey, Bill, thanks for joining us, buddy. We've posted your contact details, so we'll have you on probably in a few weeks. How's that sound?
That sounds great, Larry. It's always a pleasure.
It's a pleasure to have you on, too. Bill Chapman, Trend Reaction, folks. We'll be right back. 877-927-6648.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190. The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay. Mr. Z, I disagree with you about liquidity drying up. I think that liquidity in that S&P is getting more and more. They've always just down there being scared and happy. Who knows? All right, let's take a look here at the U.S. dollar index, boys and girls. You'll notice at that 96.90 level, that's exactly 78% from the low December 30th to the tick. TICK. Now, that means that ABCD pattern that we had up there at 99.75 is now completed one full swing down. Now, if you remember when I showed you this morning about how the market in the S&P repeated itself when we had a 100-point rally when the Fed came in, and we had a 100-point rally last night, if you look at this from point A way back in September, late September, you'll notice that we came down all the way in January. That move right there is exactly the same as the move we've had here in the last 2 weeks. It's just shortened up in the time frame. It's done exactly the same thing in a shorter period of time. What does that mean? From a technical standpoint, it means that the fat lady's got the orchestra going. She's got her conductor there. She just walked out on the stage. She's got the microphone on, but she hasn't turned on the batteries yet. And when those batteries turn on, the U.S. dollar is either going to break this spot here at 96.90 or it's going to go all the way back up again. That's why I posted that chart on the euro a little bit a while ago, because this is the exact opposite we're seeing with the U.S. dollar index. So keep an eye on that one, folks, because that's real money. We trade billions in the stock market. We trade trillions in foreign exchange. So this is where the real money is. So pay attention to what those foreign exchange markets are doing, because they'll tell you where it's at. You'll see a lot of things on the internet about how the U.S. dollar is going to collapse. Well, the only way that U.S. dollar is going to collapse is if this dollar index starts getting below that 96 level. Then that would be it. The reason why is that big ABCD pattern that took, it took exactly a month to fill up, was a 61% retracement on the weekly. So that means that the U.S. dollar would be weakening. What does that mean as far as the general economy? Hey, I don't know. I'm just looking at numbers for folks. I can't do. It's beyond my pay grade. And I have a master's degree in some of this stuff, but it's been so long ago I don't think they teach it, because it was on stone tablets when I read it. But just look at the charts. If prices are going up, there's more buying. If prices are going down, it's more selling. And I know Terry's made a comment here about the central banks. They have coordinated, and they have, because we are living in interesting times here, folks, which is actually a Chinese curse, as you know. But we don't know what's going to happen to this. Let me show you. Shane sent me a really interesting chart. Rich Anderson did. Maybe it was Shane. I think it was Rich. Rich. Yeah, it was Rich. Hold on just a second. No, this was from Cy, I think. Okay, this is the global cases from Johns Hopkins. That's where my daughter went to medical school. If you'll take a look here, there are 93,000 confirmed cases. Do you realize just last week we were talking about 35 or 40,000? You see here the big thing in Asia there, all the stuff there and where it is in Europe and a little bit. We have nothing in North America. You see the little spots starting to form in Africa? There's the problem, because those folks don't have any way of protecting themselves. We have really good medicine here in North America, and that's going to help it. Now, this is can you imagine what it will look like if these red dots that are over Asia move into Africa and North America? Shut the front door and raise the rent. That's where the real problem. See, it's going to shut down commerce, and that's where the real problem will be. And it might take a few years to get through this. I don't know, but we'll just have to do it. But keep an eye on it. Watch the price action, folks. You can't ask for any more perfect price action than we've seen here in the stock market. Last Friday, I mean, every single index, all of them, to the second or third decimal point, hit exactly Fibonacci numbers. All of them, all your FANG stocks, which is 10% of the Nasdaq, all of that was spot on. That means something. Someone made a monster bet in there. Until that breaks below that, it doesn't mean that it's it looks like we're going to be going higher. I trade the swings. That's all I can tell you. I can who knows. I do know that if you get that big ABCD pattern that comes in at around 2,600, that's a long way from where we are right now. That will be a good buying opportunity. How much of a good one, I don't know, but that would be your first big time major ABCD pattern since 2014. So that would really be 2016. Sorry, right after that, right into the election, we were having one. So we'll see. So it looks like it's going to be President Biden and Vice President Michelle Obama. Sounds like a good ticket, and then we'll see what happens after that. If I were Mr. Biden's insurance agent, I'd ask him to switch over to the general, because he might get a better rate, but who knows? We'll have to wait and see. And then, of course, right after that happens, Hillary Clinton will be made Secretary of State once again. As we move on, someone's asked a question about the cattle market. I think we've made some type of a small bottom in the cattle market. How much, I don't know. All I do know is that we've made that top up there. That was a pretty easy one to see. We'll get this up here to take a quick look at it here. And we've had a pretty good bounce, at least so far, in the cattle. But these are just patterns, folks. That's all we're looking at, what's going on. Who knows? Okay, I don't know if I'm on a roll or not, but who knows? 877-927-6648 if you have any questions. Someone asked me a question about Apple, the stock, the number one stock in the whole wide world. Let's get it up here so we can take a look at it. Where are you, Apple? Come on, bear with me here. I keep getting softy up here. There, Larry. There we go. Here's Apple. Get this up here and take a look at it. Here's a perfect example of what happened last Friday. Well, you can see the 382 retracement on the Apple came in at 259. The low was 257 and change. It's down $71 from the high. We've had a pretty good rally up into the 290 so far. But that's the key. This is what happened on Friday. All of those big stocks hit it. Be able to see what's how about, Kevin Spacey how about the guy, Charlie Sheen's father? He would be a really good one. Martin Sheen, he would be a really good president. He played that West Wing really good. That's good. So we'll see. Anyway, that's what we're looking at here this morning. Let's take a quick look to see what's happening here. We got the S&P went up to still holding the fib point. We got down as low as 35. Now we're putzing around here a little bit here, and we'll see what's going on. We'll pay attention to this as we walk through here in the trials and tribulations of the world. The crude oil to us still looks a little bit lower. We made that big ABCD pattern, and that's it. We're starting to lighten up here in the S&P again. But if we get, folks, stop and think, folks. How can the market do this? I mean, do these numbers? I mean, there must be something to these numbers. I mean, they don't work all the time, but they work some of the time. Look what happened on that S&P. I mean, it stopped exactly to the tick. I mean, I'm not saying you can trade it for one tick, but look at it. Look what it did. It was exactly 100 pips from the bottom to the top. Okay, 30. The number was 30.74. That was the exact high. That was a 100 pip rally, just like we had at Fed time. That's market statistics. You got to know these things. Find out what the standard deviation of these things are, because that's how the options pricers move. And when they get outside those standard deviations, that's where the problem is. Thank you, Jimmy D. Looking good, Billy Ray. It's the coffee. It's the coffee.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're on, and what we want to do is to pay close attention to these markets, as we've said before. It's all about risk control. It's all about probability, nothing more, nothing less. We're going to be okay no matter what happens, so hang in there. Wash your hands, do the stuff that you're supposed to do to protect yourself, and, we're going to live through it. We've lived through other things a whole lot worse than this, so, we'll just do one thing at a time. And remember, most of the news coming out, you can't believe believe. So pay close attention to that for sure. Watch the euro, folks. 106.70. That's the one. 110.67. 1.1060. Watch the euro down there, because that should be major support, and that would be the key to that U.S. dollar index. Because when that moves below 9,200, that U.S. dollar index, the fat lady's going to stop singing. So sort of pay attention to that. We'll watch. Anyway, go from one to another, and we'll see what happens. So that's the main thing of what we're watching here today. Very important here. And tomorrow we will have Bill Meridian of Cycles Research. He is basically, I believe he's long gold, short bonds, and short stocks, as I recall. But we'll have Bill on tomorrow at 9:30, which will be very, very good. I want to thank our good friend Bill Chapman for being on today. Always has some good information. So I'll leave you with this chart here of the different things that have happened over the past 45 years here in the market, and you'll see that we've lived through all of these things, and we will live through them again. So we'll see. We have a question here from someone saying, that point D, does it fail? Yes, Jimmy, it could fail, but at 2,600 in the S&P, we should have some support coming in if we get there. I don't know. 877-927-6648. We'll see you on the flip side tomorrow, folks. Live every day in an attitude of gratitude, and may God bless. And we will have Bill Meridian, Cycles Research, Vienna, Austria, as our guest tomorrow. So save your cards and letters and get your questions in.